It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast, into another weekend as we talk your property news 7 days a week. And you can hear us these days on iHeartRadio, Spotify, Apple Podcasts and Amazon. You might be having your breakfast thinking, gee, it was a really busy one this past week, and it was. Today's Saturday, September the 28th. Good luck if you are having a look at property. Yes, as I say, very interesting week. On Tuesday, the RBA stayed in that pause mode. And one of the questions that continues to be asked of Michelle Bullock when she tunes up for these press conferences, and it was highlighted a few days ago, is that question of why is Australia not following suit of other countries and bringing the relief to mortgage holders and lowering the cash rate. This is what she said.
Economic circumstances here are a little different than they are overseas. So some of the countries you cited, New Zealand, Canada, for example, are seeing quite sharp rises in their unemployment rates. The United States is a little different as well. Their disinflation process is further advanced than ours is. The other point I would make is that most of those countries had official interest rates up over 5%. We're restrictive, but we think they're more restrictive than us. And so they're removing some of their restriction because they're seeing disinflation and they're seeing their labour markets respond as well.
Yeah, and that probably, I know, doesn't make it any easier if you are a mortgage holder hanging on for dear life with those expensive mortgage repayments. If you'd like to weigh in on the conversation, of course, you can do that. Our email address is myrealestatepodcast@gmail.com. And off the back of all of that, we are going to zero in on current interest rates and opportunities and some existing lender policies with all the challenges in the market. And Anthony Landahl is joining us on our Saturday morning, mortgage broker and managing director at Equilibria Finance, and mortgage broker Raj Ladher. And let's start with those interest rates, Anthony, because this week, as we just highlighted and predicted, the RBA left the cash rate alone. We spoke, of course, on Tuesday and thought that might be the case. So what are your thoughts about the RBA's decision that is now behind us, and Governor Michelle Bullock's comments, and what is particularly happening in the market with those fixed and variable rates?
Yeah, good morning, Craig. Great to be here again, mate. Look, I think Michelle Bullock's comments are very, very relevant in the context of the Australian economy and the RBA holding rates at 4.35%. As she said, the US, UK, New Zealand, their cash rates were all above 5%. Their inflationary targets and their unemployment targets are now within range. So they are now looking at cutting their cash rate. So even with some of those cash rate cuts, their cash rate is still above where we sit currently. We had some encouraging CPI numbers this week, but essentially a lot of that was on the back of energy bill rebates. My sense is that the RBA is going to stand strong until at least the new year, when inflation is back under control. Which brings us to what's happening in the market. Fixed rates are starting to move. The 2 and 3 year fixed rates are starting to move. Raj and myself are starting to have those conversations with clients now about whether they want to fix. And variable rates are still hovering in and around the 6%. There's not a lot of movement in variables, but we are seeing some fixed rates now in the mid-5s, which is encouraging over the 2 to 3 year period. And some clients are starting to consider that as an option, given where we're heading with our own cash rate.
Okay, and Raj, you work in the central coast of New South Wales, where there has been plenty of this growth over recent years. Of course, that makes it a difficult time for home buyers. You work with a lot of first home buyers on the Central Coast, and this will be applicable to other parts of Australia where there has been an unprecedented rise in property prices. So what are the challenges they are currently facing, and how are you helping these clients out?
Yeah, good morning, Craig, and thanks for having me again. On the Central Coast, well, like anywhere really, any first-time buyer is struggling to actually save for a deposit, especially if they're renting. And the people on the coast are struggling a little bit more because there's a lot of money coming up from Sydney, whether that's people migrating up to the Central Coast because of some remote work, or people are actually investing in property up there. How we're helping people on the coast to get into their first property is having a real deep dive into their circumstances to get a better picture of how we can help. Budgeting exercises for anyone really, whether it's a first-time buyer or an existing homeowner, it's always a good time to do. But doing the budgeting exercises with our first-time buyers allows them to save a little bit more as well. Based on that saving, we also look at the various federal and state government schemes which are available to first-time buyers in order to get them into their first property sooner.
Yes, those budgeting sort of requirements that you guys are so good at in terms of saying, hey, this is what you need to be thinking about, so critically important when applying for a mortgage in 2024. We are talking property and in the mortgage space this morning. We'll come back. We'll talk more after this.
Unlock the secrets of real estate and stay informed about the latest real estate buzz with hot market trends, emerging suburbs, and hidden gems.
And right now it's time for another 30-second property tip as we go to Albany. And good morning, Kyle. What have you got for us this morning?
Yeah, good morning, Craig. I suppose my tip for sellers would be when they're researching to try to find an agent, just delve just that little bit deeper into who they are and what they're about. Quite often they'll have a Facebook page, an Instagram page, a LinkedIn page. Just find out what they're about in their spare time and what they might get up to and sort of who they are. Are they a local of your area, or how well do they do in that area? I think sometimes if you delve a little bit deeper, you sort of find out a bit more about them, and you might even be able to have that relationship a bit quicker, that you can trust each other. And of course, if you can trust each other on a deeper level, then I think you'll get a better result.
Why blow your advertising budget on ads people ignore? Connect your business to our niche real estate audience. It's a targeted way to reach the right people. We have over 1,000 episodes on real estate, the largest property podcast library in Australia. Our email address is myrealestatepodcast@gmail.com.
And it is a real estate Saturday. Enjoy your weekend. As I said, if you are looking at property to buy, perhaps you're going to an open home, perhaps you've got some of those papers that need signing today. Good luck with any of it, all of the above, if you have secured yourself a property. Now, let's get back to you, Raj. What about these people who are self-employed? It seems like a lot more flexibility with some self-employed policies that are in place. What are you seeing in this space from providers especially?
Yeah, some great changes for the self-employed people looking to get into the property market. Back in the day, like even if we go back 24 months, there was a lot of banks, or most banks would want to see 24 months worth of individual tax returns, company tax returns, and accountant-prepared financials if there was a PTY limited. Now we're seeing lender policy change where they're managing that risk for self-employed a little bit better. So one of the ways is that some banks are happy with just 12 months worth of financials as opposed to 2 years worth. Some banks can even just accept a notice of assessment for the self-employed as the individual. They don't even need to see the financials for the business or the individual. If there's a self-employed person who is working as a company and is a PAYG who receives pay slips, some banks are happy just to accept the pay slips just as any other PAYG individual as well. Another requirement was the banks would require for the ABN for that business to be trading for 24 months. That's not set in stone anymore. Banks are open to even a newly created ABN based on them being in the industry. Industry experience goes a long way. It's not a new thing. There's still obviously low doc and no doc loans using accountant's letter. But all of those above that I just mentioned, using one set of financials, using a notice of assessment, you having pay slips allows somebody to get onto the property market without having to go down the low doc or the no doc route.
Yes, and Anthony, that 24-month, that ABN situation, I mean, that was blocking out so many opportunities for people, wasn't it, to have to wait those 2 years. That flexibility must be a crucial area that you've seen some good relief for your clients.
Yeah, it's a much more common sense approach. Obviously, a lot of self-employed might transition from the same industry into a self-employed capacities, removing and having a little bit more flexibility about the length of the ABN and some of those items Raj has outlined makes it much more practical for self-employed trying to get finance ready. As you say, the ABN's just part of that.
And let's just have a look at that finance ready with you, because we talk about finance ready, we talk about finance fit, having all of those ducks all lined up in a row. Sometimes you have, your ducks, but it doesn't look like it's in a row. It's a bit of a weaving effect. And that's where, of course, the process can break down for so many people. You would think that this is quite an easy ask, but a lot of people, they're just not paying enough attention to the detail. And we sort of bang on about this. So what are some of your suggestions?
Yeah, it's really, really important, whether you're entering the market for the first time or looking at doing something for the second time, whether it's an upgrade or an investor. As Raj said, some of the main challenges in being finance fit or getting access to credit is around servicing and then your deposit, how much savings you have to contribute. So what a credit assessor's looking at, which is how we try and educate our clients, is credit history. Make sure if you've got any outstanding debts, you're making the repayments, you're making them regular, you're not missing repayments. Even one missed credit card repayment, for example, can affect your credit score. Then it's about stability of income, whether you're self-employed or PAYG. The credit assessor's looking for stability around income. How much does it take to live on, which is your living expenses, and your liabilities. What personal liability limits do you have, whether it's your credit cards, a motor vehicle loan? So it's being conscious of those factors when you're looking for credit. Your income, which is your employment essentially, what you and your family cost to live on, which is your living expenses, and your liabilities and your liability limits. And sometimes, as Raj hinted at before, it might take 3 to 6 months to educate, to prepare and be ready to put that application in to ultimately get your approval and be ready to purchase that house.
And another little bit of a tip here is that if you've got a $10,000 credit limit on your card, just reduce that down for the purposes of the bank, because the bank doesn't look favourably if you've got a fairly decent sort of credit on your credit card. Just quickly, Anthony.
Yeah, look, any credit limit, even if you're paying it down, they'll take the limit of that. So it's uncanny how many times people will have a $20,000 credit card here or $15,000 credit card there that we say, look, if you close that or lower that limit, it will have a positive effect on how much you can borrow. So you're spot on, mate. All of those things are brought into play.
All right, well, enjoy the surfboard, enjoy your weekend, and once again, thanks, Anthony, for coming back on to the Real Estate Breakfast on our Saturday morning.
No worries at all.
And Raj, thank you. Good luck with all of your clients that you're dealing with. Have a great weekend.
You too. Thanks, Craig.
We don't just report on real estate news, we take you to the source of the information. We produce more property podcasts every week than anyone else. We are your trusted guide for all things real estate.
The blog will put Phillip Island on the map of real estate as well, for those who hasn't been here, who didn't know about it as a holiday destination.
Yeah, well, I don't know if there's any evidence to support the past 19 series, whether or not there has been an uptick. So it could be a little bit of wishful thinking by prospective sellers, and then you've got to temper that with perhaps reality of what might unfold.
Yeah, exactly right. And another thing is like there's a lot of sellers who thinks this way, and what they probably don't think about is like it might bring a lot of competition. But of course, like if it brings the marketing activity, it's more attention from the prospective buyers, to have more stock will be even better.
We connect you to the best real estate information across Australia. The Real Estate Podcast.